Welcome back. A bombshell sports betting deal and a big move for ESPN and Disney. What does it reveal about CEO Bob Iger's larger plans for the struggling media giant? And will tonight's earnings report provide any more clues? We turn to Julia Borson with those questions. Hi, Julia.
Hi, Kelly. That's right. Well, I think that this ESPN deal to launch its first sportsbook really indicates that Bob Iger is looking for new revenue streams, and he's willing to go into uncharted territory in order to generate some new revenue. And I think he probably sees this sports betting business as perhaps some low-hanging fruit.
Oh, Kelly. I was like, is she throwing to a soundbite? I'm sorry. Okay,
no.
Yes. No. So all of this said, the larger question is, where is he going from here? Is he prepping the company for a sale, right? He's clearly stripping away a lot of these different, I don't know what you'd call them, distractions. The theory going around today is that he's trying to make it more palatable for someone like Apple down the road, perhaps.
Well, there's been a lot of speculation. Analyst Laura Martin from Needham has speculated that Disney would be a great acquisition target for Apple down the road if it were to divest of certain assets. But I don't think that's what's going on here. I think he's seeing the fact that ESPN has stayed away from really engaging in sports betting up until now. But now that so many states have legal sports betting, there's this huge financial opportunity. And he wants to make sure that it's not just DraftKings that's benefiting from the interest in sports betting, but that ESPN is as well. So they're going to have $150 million in revenue every year over the next 10 years that is going to flow directly to the bottom line from this deal with Penn Entertainment and to create this new sportsbook. And I think what's really essential here is understanding that he's just generating new revenue opportunities from the assets they already have. This does raise the question of what he's going to do with ESPN. He said they'd be interested in having some potential minority investors. We have reported that Disney and Bob Iger have talked to all the major sports leagues, NBA, NFL, NHL, and MLB. And the question is whether they could get these leagues to come in as investors in ESPN and make them really benefit from the upside to bringing ESPN both direct to consumer as well as have ESPN have a linear platform on linear TV. So I think there's a lot that still has to be figured out about ESPN, but I do think he's just looking for more opportunities to monetize the assets that they already have.
Yeah, and I also think it's interesting investors like Stephanie Link don't like their Hulu plans. I don't know if he would ever backtrack on that.
Yeah, I mean, it seems like at this point they're very much on the path of buying out the remaining stake in Hulu that Disney does not currently own, that is currently owned by Comcast, which is, of course, CNBC's parent company. It's still unclear how much they're going to have to pay to buy out their remaining stake in Hulu. And then the other piece of Hulu is that Disney has said they're going to be incorporating Hulu into the Disney Plus platform. And this is all to make Disney Plus stickier, to say you're getting so much content from this platform, you're not going to just cancel it when The Mandalorian or your favorite show is over for now. So it's really about generating that sort of consistent ongoing value and seeing the general entertainment appeal of Hulu as being part of that.
Right.
We don't know exactly what that's going to be going to look like, but it is set to happen this fall. So I think that there's a lot still to be learned about his goal for Hulu, and then also what Hulu looks like when it's entirely owned by Disney, which we do expect to be the case.
All right, Julia, for now, thank you. Julia Borson, we'll get those results as mentioned after the bell.